Welcome to the 10th episode of Office Hours. Today we will be answering a lot of your questions, and I'm looking forward to that. But first, I have a question for you. At least one person said, Pascal, you should be wearing something else than t-shirts. So today, I do not have a t-shirt. I'd love feedback. Do I continue with the t-shirt theme?
Team t-shirt!
Or do I start wearing shirts like this one, or even suits sometimes? Up to you to tell me, and I will act accordingly. Without further ado, let's dive into the questions. All right, first question. Well, I think it's a bit of both, frankly. Let's transport ourselves back to the past and to the very early beginnings of the internet. I believe that you would have answered this question in exactly the same way, right? Fantastic opportunities, but who knows? And maybe it's going to avail to absolutely nothing. And I think that as far as cryptocurrencies, crypto assets, digital assets, assets that are endogenous to a blockchain protocol, whichever they may be, we're going to have a wild future. Some of these innovations that work are going to be used for the financial services industry. That's the industry that we invest in. Some will fail. So I think a bit of both, right? A bright future and also a graveyard of a lot of things that are going to fail. Second question. Well, that's a tough one. I'm not a social impact investor, so my role is not to solve social issues. At the same time, I think that only investing for profits in the venture world is a thing of the past. I have to be cognizant of environmental, social, and governance issue, ESG. I have to look at every startup from that lens. I may even invest in ESG startups that solve a particular need in the ESG space for the financial services industry. So from that perspective, I think that I have to include social impact in the way that I invest. But I'm never going to be a social impact investor. A lot of investors won't be social impact investors. They'll have that in mind, but they won't lead it with it. However, they will not leave it outside of their purview. Third question. At what point do valuations not make sense? Let's indeed look at the Revolut. Does 30 billion make sense? Frankly, I don't know. A lot of things do not make sense to me. You have to approach it from a macro level perspective, right? With interests so low and a lot of investors seeking yield, that pushes up alternative investments. You have to approach it from a micro level. There's a lot of digitization that is happening in the world, and these companies that are in that trend will grow and grow and grow. So I guess that it will make sense until it doesn't make sense anymore. And with some valuations, 30 billion, you're going to have to earn it and show it. And then when you stop earning it and showing it, then that's when it doesn't make sense anymore. Fourth question. What is the next trend in my neck of the woods in the VC world? So I can only answer it from the point of view of financial services and fintech. And I will say that I will see more and more ESG related issues. I discussed this with the previous question. I think that's going to be a trend that grows and grows, that I have to incorporate in the way that I look at startups. And eventually, if I invest in a startup that is in the ESG space, I won't be surprised. So I think that's a trend to look for. Fifth question, and that has to do with retail investors. Should retail investors invest in venture startups either directly or via a fund? I would say that directly. If you have subject matter expertise, you should be an angel investors. Knock yourself off and have a lot of fun doing so. For retail investors that do not have subject matter expertise and would like to access the venture world and invest in funds, that's a tough one, right? You have to be patient. Your money is locked in, and there's a high risk and high volatility. So I would say that I'm somewhat against it. I think it best should be left to professional investors. I do see the trend. I think that in the UK, there is a certain amount of pension from pension funds, UK pension funds, that can be made available to invest in venture funds. I would say proceed with caution on that one. Question number 6. What's the impact of COVID on how I invest and on my portfolio? Well, I think that COVID is and will remain an accelerant for digitization of all kinds of workflows and processes in the financial services industry. So net, it's a positive, as long as I find the right startups that are on that path of helping the financial world and the financial services world to digitize. So with lemons, you make lemonade, basically, from that perspective. As far as the impact on the portfolio, I think it has been positive so far with all of our startups. And then finally, how does that change the way that I invest? As long as I can't meet someone in person, physically, I need to meet that person 10 times over a video conference and try to kind of like circumvent the lack of like physical interaction through reference checks, through talks with the entrepreneur and the founding team to kind of like, figure things out in a different way than I used to before COVID. And that's, sometimes tricky. Seventh question, right. We've seen a lot of disruption, a lot of innovation in the banking world, in the insurance world, in payments. What of capital markets and what of asset management? Well, I believe in a world of frictionless finance, or as much frictionless as we will be able to create it with regulation and with legislation in the financial services industry. So yes, I agree that there's going to be quite a lot of disruption in the capital markets world and the asset management world. I believe that what we have seen in banking, SaaS businesses, APIs, platform this, platform that, will happen in capital markets, will happen in asset management. If anything, these two ecosystems are a little bit behind compared to other parts of the financial services world, and they will catch up. So disruption is happening there too. Question number 8. And that has to do with a digital euro, a central bank digital currency. I won't get into the intricacies of the definition of what is a digital currency, because that's a little convoluted. Suffice it to say that my bet is on digital currencies that will be made available either wholesale or retail by central banks around the world will happen. That's a logical evolution of software is eating the world, and now software is eating money in financial services. Whether it is good or whether it is bad, net positive, net negative, there's a lot to look at, and that will have to do with like the features, the functionality, the privacy of such things. One thing is certain is that it will a digital currency that is issued by a central bank, whether it's in the EU, whether it's in the US or in China or in the UK or anywhere else, will give more power and more control to the political sphere and to the central banking sphere. So anything that allows for a counterbalancing of that increased power will be welcome, I think, to keep things somewhat balanced. Question number 9. This one is very, very tricky. Banks are still under pressure, whether it's cost creeping up or whether it's return on equity being under pressure. I'm going to try to answer it. God damn it. If there was no regulator, if there was no political power to keep banks the way they are, I believe that the banking industry would crumble, and out of that would emerge new competitors, right? Whether coming from outside of the financial services industry or whether startups coming from the fintech world. That's not the case. So my point is, we have a political issue, and what will the political powers decide in terms of like monetary structure, in terms of money creation, and in terms of protecting some of the banks that they will want to protect? That's up for us to kind of like figure out. I really don't know. All I know is how banks will survive, or how some banks will survive, is not a technology or a competitive issue. It's purely political. Last and 10th question. This one is a doozy too. What makes a VC a good VC? Is there 2? Is it 3? Is it 4 attributes? I'm going to give you only one attribute, but it applies to several things. That one attribute is a VC that wants to excel at investing as a venture in venture and in startups needs to be like Wayne Gretzky, the all-star Canadian hockey player. And why are you going to ask me? And I'm going to answer, obviously. That VC needs to skate where the puck is going to be instead of where the puck is. And that applies to, I think, two things, as far as I'm concerned. Number one, a good VC needs to figure out how the market is going to evolve over the next 5, 6, 7 years. The market structure, competitive issues, and so on and so forth. Where the puck is going to be as far as the market. Number two, the team. How does the team change? How will the team grow over the next 5, 6, 7 years? And picking up the right team right now that will be able to execute in 1, 2, 5, 7 years. Again, skating where the puck is going to be. If you nail these two things, chances are that you're going to be a good VC. All right, now that concludes this episode. I always love answering questions. We're going to make another episode for all kinds of other questions that you will ask me, and I look forward to those. Please keep them coming, keep that coming, and I'm sure that with the next episodes, we'll have also surprises for you that you're going to love. So for now, bye-bye.